Now, everything we talked about and everything we're going to be talking about today is built off of a candlestick pattern. I know a lot of Forex traders love to use candlestick patterns. I think probably more than any other market around. Forex traders really love candlestick patterns, the way they can give them an insight into the market. So we're going to talk about a specific pattern that is incorporated in today's lesson. And that pattern is the engulfing pattern. Now, you can either have a bullish engulfing pattern, as we see here. And just to clarify, when we say bullish engulfing, for those of you who may be unaware of what this is, we're just looking at a two-bar pattern here. Now, this is a downward day. In other words, the market or the whatever we're looking at, the currency pair, opened here and then closed here. That's why we have this dark body. But the next day, we opened down here and then closed higher. So the range from open to close totally engulfed yesterday's range or the previous day's range from open to close. So that's all we're concerned about, engulfing the previous day's open to close range or the body of the day. We're not concerned with engulfing the absolute high range and the absolute low range. We don't care about that. We're only interested in that we engulf the prior days. If we have a up day that engulfs a downward day, well, that's a high probability that we're going to be going up. All right? Now, just the opposite side of the coin, this is a bearish engulfing pattern where we have a open to close lower, so a dark body that totally engulfs the open to close of the previous days, but the previous days was an up day. And we're only concerned, once again, about engulfing the body. We're not concerned about this day engulfing the high and the low, the range. We don't care about that. I know some other traders like to look at that total engulfment, and that's okay, but you won't see a lot of those all the time, so we're only concerned about engulfing the previous day's body. Today's body engulfing the previous day's body. And this is a bearish engulfing pattern because most likely the trend will continue lower. Now, the reason why we really use this as a strong edge in a lot of our strategies, and especially in today's presentation, is because there is a high probability that the trend will continue in the direction of the engulfing bar for the next 2 to 5 bars. So this is a tremendous edge. You know, we talked about the specialist edge. This is, not an indicator. This is not some news. This is not a trading room or chat room. This is something that the market tells you in a 2-bar pattern that there's a very high probability the trend is going to continue in the direction of the engulfing bar for the next 2 to 5 bars. This is a tremendous edge. Now, if you're looking at a weekly bar, this could be for the next 2 to 5 weeks. If you're looking at a 5-minute bar, it could be for the next 10 to 20 minutes. But it's all relative to what time frame you're looking at. Now, here's an example here. The British pound and older chart we see here, the starting, looking back in hindsight, we have a bullish engulfing pattern. This body totally engulfed the previous day. And look at the next 3 bars or so went up. All right? But then we get to a bearish engulfing where the dark body engulfs the upward white body, and then we have 2 days down. We come here where we have 2 instances of bullish engulfing patterns circled in green here, and then the direction goes up, and so on. You see that happen in any direction and in any time frame. Now, we want to go to a smaller time frame. Here's a hourly chart, 60-minute chart. And we have a bearish engulfing pattern right here, and look what happens. The next 3 bars are lower, accompanied by 2 bullish engulfing patterns circled in green. The trend continues higher until we get to this bearish engulfing pattern, and the trend continues lower. So you'll see this. It's not guaranteed. It's not going to work 100% of the time, so I don't want you to go from that mindset right off the bat. But just be aware that this is a great edge that can really be used as a really strong directional tool. All right, so that's the way we define and pretty much cover engulfing patterns. These are the standard bullish and bearish engulfing patterns. Let's take it up a notch to our first edge, which we covered in part 1. This is engulfing pattern plus 1. All right, so we're just reviewing here. Engulfing pattern plus 1. So what exactly is that? Well, here's your standard bullish engulfing pattern. All right, the bullish day engulfs the bearish day. Plus 1 just means that we also engulf another day. So we've engulfed not only the previous bar, but plus 1 more bar. Okay? Now this can be plus 1, plus 2, 3, 4, 5, 10. It doesn't matter. But as long as we're engulfing more than 1 bar or more than the previous bar, there's an even stronger probability that we're going to continue in this upward direction. Now here's something that I want to focus on, is that we do not care which direction this plus 1 bar is. So where we engulf the lower body here, the plus 1, it doesn't matter if it's an up bar or a down day. It does not matter. All that matters is that we're engulfing another open to close range, regardless of which direction. Because if we have a bullish engulfing +1, there's an extremely high probability that we're going to continue even further in that direction. All right? Same works with the bearish engulfing pattern +1. We have a bearish engulfing pattern. We have a downward day from open to close engulfing an upward day. +1. We engulfed one more open to close range. Once again, it does not matter if this was an up day or a down day. In this example, it's an up day, but it could just as easily be a down day. It does not matter. It just means that we're engulfing two open to close ranges, an engulfing pattern +1. Why do we look for that? Because there's extreme high probability that we're going to go even more in the direction of the engulfing bar. All right, so let's look at some past examples using this engulfing pattern +1. We see here in the Australian dollar, we have a bullish engulfing pattern +1. We engulfed the previous day +1, and after that, it was off to the races, up 900 pips. Another daily chart of the euro dollar, we start out looking here, we have a bearish engulfing pattern +1, and the trend changed lower, down 300 pips in the trend. But then we're thinking, well, this is a pretty nice move, but look what happens. The market is giving us more signals. Once again, this is the edge we're talking about, how the market tells you everything, not an outside source, but all you need to know is what the market is telling you. We have another sign here that the market is giving us. We have another bearish engulfing pattern +1 and another bearish engulfing pattern +1. So the market is telling us that don't get ready to cover yet or don't get ready to go long because most likely the direction is still lower. And look what happened. Continue to go lower. If we look at a weekly chart, because this transfers over into any time frame, any direction, we have a bullish engulfing pattern +1, 2, 3. Very strong on a weekly chart. Went up 800 pips in the next couple of months. Another weekly chart of the Canadian dollar. We start out with a bearish engulfing pattern +1, telling us we have a downward move. So at this point, we'd probably say, well, 1,000 pips, it looks like we're probably going to stop here. We have another bearish engulfing pattern +1, and there's more room to the downside. Remember, this is best used as a directional tool. We haven't told you how to put it together in a strategy, but you see how it's really giving you a great insight into the direction of the market. One of the things my mentors taught me was that the market is always giving you clues as to which direction it wants to go in. Either a weekly chart, a daily chart, a 5-minute chart, doesn't matter. The market is your best source for information. Once again, not the news, not an indicator, not even a strategy, but the market itself. The only trouble is that most people do not know how to listen or read the market. They're trying to impose their own ideas onto the market, and this is where it gets confusing, and this is where you ultimately lose money. I know this is the way I did. I would always say to myself, well, the market has gone too high. It's way overbought. I'm going to short it because I was, putting my own idea of what I thought the market should do. Or I thought the market was too low. It's tremendously oversold. I'm going to buy it. So I'd go long, and it would continue to go in lower. You see, I was listening to myself, my own ideas, rather than listening to the market. So it's much easier. You have a lot better sleepful nights if you just listen to the market and go in sync with it, rather than trying to fight it. Here's a monthly chart, okay? Just an example to show you how this first pattern goes on to any time frame, any direction. We have a bullish engulfing pattern +1, and followed by more bullish engulfing patterns +2, +1, +2, and so on. The whole time at these points here on a monthly time frame, the euro-yen was telling you, I'm going much higher. So just come on board with me. Don't fight it. Don't try to sell short. Don't listen to any news. Don't get involved in some trading guru telling you what to do. Just listen to me and go in sync with me. The easiest thing in the world, and a lot cheaper too. Here's a monthly chart of the Australian dollar. Once again, bullish engulfing pattern +1, +1, bullish engulfing pattern +1. And guess what? At this point right here, we had a change. We had a bearish engulfing pattern +1. So this was giving you a clue that maybe we're going to change on a monthly time frame this nice upward move here. So remember, this is not a strategy, just a great directional tool. So at this point, let's say you had been long, you may want to move your stops up. You may want to, just be very careful. If you were thinking about going long more the Australian dollar, you may want to curb your enthusiasm a little bit and sit to the side and say, you know what, I'm going to sit back and watch. And it would have been the best thing to do, listen to the market, because guess what happened? We fell out of bed. Once again, at the top, no trading guru, no news, no indicators were giving you this, but the market was telling you. Most likely we're going to have a trend change.